right, welcome everyone. Part-time trader here with the weekly market view, and the next 30 minutes will be the first in hopefully a long series of opportunities for me to share a slightly more detailed and more nuanced outlook on global markets. Those of you who follow me on X through @part-time charts will know that I've made some quite bold predictions about what is in store for investors over the next couple of years. Probably the boldest among all of them is my prediction that Bitcoin at some point in late 26, early 27 will trade at about $4,000 per coin. Now, I faced a lot of criticism from people stopping by on X to tell me that I'm bonkers, that there is no scenario in which Bitcoin could face such a dramatic downturn. And what I thought I would do, therefore, in the first of these videos, is spend a bit more time padding out for you the technical and fundamental factors that have informed my view that we're on the brink of a major crisis for cryptocurrency investors. Now, nothing that you hear today in this video constitutes financial advice. This is merely a platform for me to share ideas and to detail some of my own thoughts on the markets and where we're heading. Do not make any investment decisions off the back of what you hear on this video today, or indeed off the back of anything that you see in the charts that I post on X. Right, let's get started. So why do I think Bitcoin is heading to $4,000 per coin? Now, as I say, many people think I'm completely crazy for making this prediction, which I have to say, I find somewhat hilarious, given that Bitcoin has a history of 80 to 90% crashes and has done so multiple times over the last decade or so. But notwithstanding, I thought it might be worth laying out a few of the fundamental reasons why I think we are in a state of big risk across equity markets and how that translates into even bigger risk for cryptocurrency investors. And I thought I'd start with this chart, which is probably, not my prettiest chart, but what this is the yield curve. So the difference between long-term and short-term interest rates. In this case, 10 and 2-year treasury bonds in the US. The yield on those financial instruments is represented, the difference between the yield and those financial instruments is represented on this graph. And I suppose what I want to draw your attention to, and lots of people have done this over the last couple of years, is the periods of yield curve inversion. So yield curve inversion is experienced when the difference between the 10-year and the 2-year gets below zero. And effectively what that means in short is that lenders are demanding bigger returns on short-term loans than they are on long-term loans. Now, that is not the sign of a healthy market. And primarily for that reason, yield curve inversion is often seen as a strong predictor of economic downturn or recession, because investors demanding increased returns, lenders demanding increased returns on short-term loans as opposed to long-term loans is normally a sign that they are anticipating weakness in the market and they are jittery about what's to come. And it's no coincidence then that when we look at some of these periods of yield curve inversion over the last 30 to 40 years, we start back in the late 80s with a correction that took place on the S&P 500, which is the chart at the bottom half of your screen. A major correction happened as the yield curve began to disinvert. I think we saw a 20% correction in equity markets in the S&P 500 starting in July, the summer of 1990. And equally, we saw even bigger corrections occur at the end of the dot-com bubble in July 2000, which was predicted by this period of yield curve inversion, which really signaled to investors that danger was on the horizon. And we also saw a major correction that became known as the Great Global Financial Crisis of 2007 to 2008, which kicked off again after a period of yield curve inversion. So we can see that these periods of yield curve inversion are fantastic predictors of economic downturn. The challenge, though, is that these periods of inversion can last several months, and sometimes the correction in equity markets begins as the yield curve bottoms out. Other times, the correction in equity markets begins long after we see the yield curve begin to disinvert. So great indicator for predicting weakness in the economy, a real sort of red flag to anybody who is thinking about piling in on markets, but not so good at helping you pinpoint exactly when markets might turn sour and when to get out and convert into cash. And what we've seen over the last couple of years on the right hand side of this chart is the steepest, the deepest, and the longest lasting period of yield curve inversion ever. So we've never seen a period of yield curve inversion that has lasted as long and has gone as deep as we have over the last couple of years. And it's interesting, if you go back, many of the big accounts on X in late 22, early 23, as equities were beginning to bottom after the 2022 correction, the yield curve starts to invert, and many saw this as a sign of further weakness to come, and many were predicting that markets were going to roll over. If only markets were that straightforward. What we saw instead was that as we headed in deeper into this period of inversion in the yield curve, actually equities picked up and reached new highs ultimately in late 2024, with the S&P so far topping out at about $6,000. And it's really interesting that the period in which investors should have been putting their money into stocks and cryptocurrency, so late 22, early 23, was actually the period where we saw the most fear in markets. And now, as the yield curve begins to disinvert, technically we are still not out of the woods, but I would say there is a huge amount of complacency in markets at the moment. And it's my argument, I suppose, my fundamental argument, and the clue that I think sits behind all of my other charts in terms of my predictions for where equities and cryptocurrencies are going. I believe that the fact that this period of yield curve inversion was so deep and so long lasting, I believe that is actually a sign that points to a much deeper, much scarier economic downturn than many people can fathom. And just at the point where most people think we've achieved some sort of soft landing, that equities are going to continue going up in perpetuity, I actually think we're at the point of maximum risk now, and that we are likely over the coming months and years to experience a correction that historically will be looked at on a par with what we've seen, especially in 2007, 2008 as part of the Great Financial Crisis. But as I say, the yield curve is a good predictor for economic downturn, but poor at helping you time the move. So what else could we use to help time our exit from risk on markets? Well, for me, I have been looking at this chart, which is a 100-year chart for the S&P 500, which is probably the biggest market in the world, the top 500 companies in the United States of America. I've been looking at this chart for many, many months now, and I see that if you look at the S&P on a high enough time frame, you'll see that the last 100 years has essentially been all a huge, gigantic channel that the S&P has been trading in. And every time we reach the bottom of this channel, we see a significant bounce, sometimes that lasts for decades. And now, potentially, we are seeing the third touch of the upper boundary of this channel, which I think, for me at least, means that there is reason to be cautious. So the last two times that we hit the top of this channel, the first was back in 1929, just on the brink of the Great Depression, which is obviously a historic downturn for financial markets. And the second was on the brink of the dot-com bust that investors experienced in the year 2000 into 2002. So the fact that we are up here, that markets are so elevated, that we've had 2 years of historic gains, historic returns on the S&P 500, the fact that we are achieving those gains at a time when people are most complacent, when the yield curve is pointing to significant challenges for investors over the coming years, and the S&P has just butted heads with the upper boundary of this massive channel that dates back over 100 years, I think for me, that is a strong sign that we should be cautious and that we should be very, very wary about where markets are heading. And if you zoom in, you can see this is a quarterly chart, so a 3-monthly chart But you can see, although there's still 24 days left until the end of the candle close, you can see that this is starting to look like a big rejection off of that upper boundary. And if we close down here, we'll put in a sort of bearish engulfing candle on the quarterly, which I think really cements my view that we're in for more downside, and that at some point over the next couple of years, we're at the very least going to take out the 2022 lows, which means, let's be clear about what that means. Even if we only get to the 2022 lows, we're talking about a correction of about 38 to 40%. That is huge, and I don't think cryptocurrencies survive in a world where equities decline by about 40%. We saw in the year 2022 that as equity markets began to roll over, Bitcoin followed, and so did the rest of the cryptocurrency market. So far, what we know is that the yield curve historically has periods of yield curve inversion have predicted major recessions and economic downturns. We know that we've had the biggest and longest period of yield curve inversion in history. And we know that the S&P is butting up against the upper boundary of this 100-year channel, which previously has predicted, or at least led to, rejection of it has led to the Great Depression of 1929 and the dot-com bust of the year 2000. So all in all, I think the warning lights in my mind are going off. I think these are red flags that point to big challenges on the way for global markets. And then I take a look at the NASDAQ and I see this pattern, and I've seen this many times before in crypto and equity markets, whereby you get compression along an uptrend that in some cases can last years, some cases decades. But what you have is a single trend line that holds and props up the price over time. And sometimes as we get closer to the point at which that trend line is going to break, the moves get bigger. So the bounce from each point on the trend line actually grows over time, and occasionally you can get to a point where you see some sort of blow off top before markets roll over, retest the trend line, and it breaks and price collapses. And that's what you saw in 95 leading up to the year 2000. You had 5 years of price appreciating along this trend line, bouncing off of it into the big kind of bubble blow off top that we saw culminate in the dot-com bust of the year 2000. And the next time price touched that trend line, it broke and price collapsed significantly. Now, we haven't been in as steep an uptrend over the last 15 years as we were during the late 90s, but you can see that there is a huge similarity in the price action since 2010 and that we saw back in the 90s. So we have consistently bounced off of this trend line for the best part of 15 years. And I flagged probably 2 or 3 months ago now, right at the peak of this move for the NASDAQ, that I believed that we were somewhere in the region of a top that would lead to a really significant decline, potentially up to about 75% over the next couple of years. Now, interestingly, if we zoom in, I haven't touched this line, so I called the top, I think in December, January, and said that price was going to come back to this target here. And since then, price has begun to roll over, and we're starting to see weakness in the market. Now, obviously, it's early days, right? And it's too early to tell whether this is the big crash that I've been waiting for. But my hunch is, given the size of these moves as we bounce off the trend line in recent years, I don't think this trend line survives another touch. And when it gives way, I think the combination of the factors that I've pointed to previously with the S&P and with the yield curve, I think we see a high probability that this breaks, it gives way, and when it does, we're in for a much deeper correction, potentially one that could take the NASDAQ down by circa 70 to 75% over the next couple of years. And if we look at the NASDAQ on a lower time frame, so that's the big picture, right? So I've pointed to a 100-year chart on the S&P, and I've talked you through the pattern that I see taking shape on the NASDAQ over the last 15 years and how that mirrors some of the price action that we saw leading into the dot-com bust. But if we zoom in and we focus on price action for the S&P just over the last 3 to 4 years, I am seeing really significant signs of weakness in the market at the moment. And it was interesting. For months, I've been saying that this uptrend here, so what we see here from sort of September 2020 into early 22, this kind of upward rising channel, I think we are seeing something similar, but on a grander scale here with the NASDAQ. And I've said many times before that I believe this structure is highly unstable and is likely to lead to a significant correction when it breaks. If you see price consistently trading up from an uptrend, the likelihood that that uptrend eventually breaks and leads to significant downturn and downside in price action is far greater than you will see on other sort of structures that charts may build over time. And what you can see is literally to the T last month, I said that we were somewhere in a similar position to this red circle when price was up here. We had swept the December highs on the NASDAQ. We had just about begun to trade back below it on the daily time frame. And I believe that was probably the first sign of weakness. The second sign of weakness was in this red circle here, where price broke the uptrend. And I said, if you look back at the charts that I laid out on X, on at part-time charts, I said that were we to break this support and resistance zone on the 3-day, this red zone here, which I'm seeing as analogous to this red zone over here, I said, were we to break that, for me, that would be the third and final sign of weakness before I can have much greater confidence that we are beginning a really significant downturn for tech stocks, and that downturn would sooner or later begin to translate into weakness for cryptocurrencies. So it's interesting if you go back, you look at the bigger picture, right? S&P all-time highs, historic moves off the lows from 2022, 2 years of delivering seismic returns for investors, butts into the upper boundary of this uptrend, or this upward rising channel, and gets rejected. NASDAQ bouncing along this trend line happily for 15 years, big move off the 2023 lows to the point where lots of tech equities look hugely overvalued, and we can come back to that in a future video. And now we're starting to see some weakness in the market and potentially a rolling over. And like I say, when we retest this uptrend again, I think the likelihood is it doesn't survive and we go much lower. And then just to recap, on lower time frames, we're now seeing, and with confirmation that the 3-day close later today, we will see the third major sign of weakness on the NASDAQ that I've been waiting for over the last few months. So not a pretty picture. And there's one other chart that I just wanted to come back to. If you go back to some of the charts, and I've reposted this recently, if you go back to some of the calls that I made in late 22, early 23, I was calling for this kind of rise off the lows for Meta. Now, those of you who follow Meta closely will remember that there was a historic bottom signal almost to the day that we hit the bottom on Meta, which is the parent company of Facebook and Instagram, when Jim Cramer cried on CNBC and apologized to all of his followers for telling them to invest in Meta stocks, which had essentially capitulated and were down something like 80% over the last couple of years. And the moment he cried, I remember texting a friend of mine and saying, that's the bottom on Meta. And I said that the slowing down of inflation would lead to huge tailwinds for equities, and I expected a move up back to the upper boundary of this sort of broadening pattern that we've seen in recent years. And I actually expected it to play out slightly more quickly than it has done, but lo and behold, a couple of weeks ago, last week in fact, we actually got to the point where we reached the apex, last month in February, and we actually hit the upper boundary of this broadening pattern that we've seen. And at the time, I remember saying to people that this here looked very much like a rising channel with a throw over. And these throwovers are brutal, so people that know the basics of trading look for this kind of pattern, rising channel as something bearish. But then when you get the breakout to the upside, so often that's the point at which people become max bullish. And look at where that breakout took us to. We saw the break to the upside, and it took us right into the upper boundary of this trend line here. Interestingly, since then, and price action, it looks awful today as well. Since then, not only have we broken back into the rising channel, we have also, sorry, the rising pennant, we have also broken the lower boundary of it, and price looks to be heading back to this level here, which was quite a significant high for us in late 2024. So I back here, you can look at the post I made on X. Back here last month, I was saying this was the top and we were going to face a significant downturn. Now, obviously, my version of a significant downturn is that I'm projecting from top to bottom that we decline about 90% over the next couple of years. Whether that plays out is still to be seen, but even the bulls have to acknowledge that on the lower time frames, this does not look good. We've hit macro resistance, we've pulled back, we've broken back into this rising wedge, we've broken down from it, and I suspect over the coming weeks, we're going to get continuation to the downside. And like I say, my long-term view is that the NASDAQ is going to crash significantly, and some of the most the top performers from the last couple of years, the likes of Meta and Netflix, are going to crash the hardest as it comes crashing back down to earth. And I suspect there is going to be a generational opportunity to buy Meta somewhere in the region of about $60 in early 2027, possibly late 2026. Right, so what does that mean for cryptocurrencies? Well, it's funny, cryptocurrency is probably the most interesting asset in the world, or asset class in the world, in that there is a bullish argument for every scenario. So people will say risk assets going up, bullish. Inflation going up, bullish. Risk assets going down, bullish. Bitcoin is a store of value. It's a unique asset that essentially protects you in every scenario. And I can see why people would be tempted by that argument, but the evidence shows us that actually Bitcoin is a risk-on asset. So if you look at what the price on Bitcoin has done in recent years, effectively, I'll just pull up the NASDAQ for us. Effectively, you see this huge correlation between the NASDAQ, which is the index for tech stocks, and Bitcoin. So my starting point is, if the yield curve is pointing to major challenges for equities, and if I believe the NASDAQ is going to roll over in a major way as a result, and that we're on the precipice of probably the biggest crash we've seen since the great financial crisis some 17 years ago. If all of that is true, if that's my thesis for markets, it is impossible, I'm sorry, but it's impossible for me to be bullish on Bitcoin right now. Because for Bitcoin to go up in a world where all of that is playing out, Bitcoin would have to completely decouple from the NASDAQ. And I just cannot see any reason to believe that that will be the case. And historically, I keep referring to Bitcoin as a high beta play on the NASDAQ. Historically, when the NASDAQ goes up, Bitcoin goes up by more. And when the NASDAQ goes down, Bitcoin goes down by more. And so if I'm right, and we're going to see a 70%-ish correction on the NASDAQ over the next couple of years, what the hell does that mean for the future of Bitcoin? Now, remember, in 2022, the NASDAQ corrected, I think, around 30%. Let's have a quick look. The NASDAQ from December 21 to the bottom in October 22 was down about 37, 38% during that time. What happened to Bitcoin during that correction? Well, high to low, Bitcoin was down over 75%. So if the NASDAQ crashes by double the percentage drawdown that we saw in the 2022 correction, what is that going to mean for Bitcoin? It's my belief that we are going to see the biggest crash potentially in the history of Bitcoin, at least in recent history. So, if you think about 2017 as the point in which cryptocurrency went mainstream, and everything before that, you were talking about a much less liquid asset that was a kind of niche investment trading on a few niche exchanges and didn't have the kind of mass attention that it does today. If you discount the price action before 2017, which was hyper illiquid and price fluctuated dramatically, even if you discount everything that happened before 2017, the biggest drawdown that we've seen since 2017 is the 84% decline that we saw between 17 and 2019. And that happened without us seeing a major correction in equities. Now, what happens if the NASDAQ goes down 70 to 75%? I believe people are going to be shocked, but I believe that that Bitcoin is going to trade back somewhere near the lows of the 2018 bear market. Now, people cannot accept that as a possibility, but for me, when I zoom out, I look at this chart. This looks a lot like the same pattern that I showed you on Meta. So you've got this kind of broadening pattern where you're seeing huge swings, big volatility. And I think we're seeing something similar in Bitcoin on a lower time frame, whereby we could potentially get one major correction that takes us into these lows, but that would be a generational low. And interestingly, and I'll come back to this in a future video, I actually think if this happens, this could be the biggest buying opportunity of my lifetime. I really believe that the correction that we're about to see is going to throw so many people off the scent when it comes to cryptocurrency. People will be so badly burnt, there will be so much money lost in the markets that en masse people will exit and they will not come back until they cannot believe their eyes when in 10 years time Bitcoin is trading at several $100,000. So to those people who call me a stupid bear and say that I'm pessimistic and that you can't make money, without being an optimist, I am hugely optimistic on the future of Bitcoin. I believe this asset is going much, much higher. But I also believe there is massive systemic risk built up in legacy markets and that Bitcoin will not be immune when some of that starts to play out. I will come back in a future video to one of the major systemic challenges that I see for cryptocurrency outside of traditional markets, which is MicroStrategy. And I actually believe that one of the catalysts for Bitcoin correcting to the extent that I'm laying out here is going to be the future of MicroStrategy. And I think one of the major risks for crypto investors is that you potentially have to grapple with a world in which Bitcoin price is going down, and that creates a really negative feedback loop for the guy who has been probably the biggest buyer of crypto over the last few years, Michael Saylor. So I can come back to that view in a future video, but for now, all I'm saying is if I'm right and equities are going to correct, Bitcoin is not going to be immune. It's not going to stand up. And then what does that look like on a lower time frame? So if we look at the last couple of months, we saw Bitcoin come up and make these highs. Everybody was super bullish. Price had broken that psychological barrier of $100,000. People were calling for it to go to $1 million. The euphoria was palpable. We then came back and retested these lows. And again, people were saying, look, this candle here, we swept these lows that had built up in recent weeks and we were going higher. And we did push higher. But ultimately, all we did was take out the high that was put in at the end of 2024. And once we took out that high, price came back into this range, got rejected. We headed back to the lows, and this time, eventually, the range low broke. Now, interestingly, since that range low broke, we had last weekend, we had Trump announcing a strategic reserve for the US, a cryptocurrency strategic reserve, which pushed price up really significantly. I think we were up something like 10% in a single day on a Sunday. Price has then come back down, and it now looks as though it's being rejected from the underside of this range low. Now, I don't know, I try to avoid lower time frame charts and short-term calls. I don't know whether this is going to be the end of the move up, whether we're going to see a rejection and it's going to head much lower. I do expect that eventually the next move, the next major move for Bitcoin is going to be one that takes out all of this area here. So effectively wiping out the gains that we've seen since this parabolic breakout, this massive sharp move up that we experienced in November 2024. I think all of that is going to get wiped out by the next major move for crypto. But it is possible in the near term that we break back above, that we potentially come in here before we break back down. And I've laid this plan out on X. For me, I would be looking to trade this effectively by waiting for this trigger here. So by waiting for the market to move up, I think there's a good risk return short here where you're being rejected at the previous lows. But the trade that I would love to take is allow the price to come back up, take out some of these highs. Everybody gets bullish, look, reclaim, back in the range, going much higher. Then all of a sudden price rolls over. And if we get back beneath this range a second time, for me, that increases the probability that price is going much lower. And then we start to fill in all of this really inefficient move up from the 60,000s. So that's how I'm seeing the crypto market at the moment. Sorry, just have a quick sip of water. A question I get asked a lot is, where's your point of invalidation? So how do you know when you're wrong? And look, that's a really good question. That, as an investor, as a trader, the sooner you work out that you're wrong on something, the more you save yourself the pain of holding a bad trade and losing money. And so I'm trying to find an easy way of invalidating this trade here. And the best way I can do that is by looking at USD dominance. So USD dominance, again, I've posted this chart multiple times. This is the dominance of the market cap of USDC, which is one of the two major stable coins in the space. And effectively, when USDC dominance is going up, we see more or less, give or take, the price of Bitcoin and altcoins suffering and going down. And the reason for that is capital is flowing out of crypto coins and back into stable coins, which people see as obviously much safer assets to hold during periods of turmoil. And what I've been pointing out is that, to me, this move up for Bitcoin over the last couple of years has perfectly coincided with this giant falling wedge on USDC dominance. Now, we broke out of that wedge mid 2024, and as altcoins began to get battered and began to give up market cap, a lot of that money flowed back into USDC alongside Bitcoin rising. And you might remember, Bitcoin for at least the second half of last year, probably the best part of the year, largely went sideways. So Bitcoin went sideways, but altcoins were bleeding heavily. And the capital that was coming out of altcoins was largely flowing into USDC and Tether and other stable coins. And you can see that in the chart here. Now, interestingly, late 2024, we broke, so USDC dominance broke this range to the upside. And at the time, I remember saying, this is probably the top for Bitcoin. But what happened was we quite quickly broke back under. And again, to my point about knowing when you're wrong, at this point, I said, you know what, this probably means further upside for Bitcoin and alts. And I projected that we would revisit the lows here, which you can see have held up as support multiple times over the last few years. Lo and behold, I made this this green projection from the lows, and I said that we should have bottomed here, and that soon we'll see a big rise up in USDC dominance, and we have done. That's taken place over the last 2 to 3 months since December, where Bitcoin made its highs. And so the correction in Bitcoin has coincided perfectly with the increase in USDC dominance. Now, how do I know when I'm wrong on Bitcoin? So the Bitcoin chart is not as clear, but if on USDC dominance, if price comes back underneath this range high, I think for me that would probably be the trigger here for me to consider downside on USDC dominance. And downside on USDC dominance would almost certainly mean upside for Bitcoin and potentially altcoins. For what it's worth, I don't think that's going to happen. I think we've deviated once, we've come back down. We've now held above this range high for 1, 2, 3, 4, 5 weeks now. This weekly candle close looks decent. We've eaten into some of the wick that we created last week through Trump's announcement on the strategic reserve. And I'm anticipating, yes, there could be a period of consolidation for the next couple of weeks, but I'm anticipating that this move to the upside will continue, and then that will mean further downside for Bitcoin. But if I'm wrong, I will know when USDC dominance starts trading back under here. So look, this has probably gone on a bit longer than I anticipated, so I'm gonna draw us to a close quickly. But one thing I did want to touch on just briefly is that lots of people believe that we cannot have hit the market top for crypto because we haven't seen alt season yet. And historically, in fairness to people, you know, every major bullish move that we've seen for Bitcoin in recent years over the last decade has been followed by an alt season. Now that's only happened 2 or 3 times, but people have gotten used to the idea that Bitcoin runs first, and that when people are sitting on huge gains in Bitcoin, that capital starts to rotate into lower cap altcoins. And of course, before people start pointing out, of course, we've seen really significant moves for altcoins over the last couple of years. Solana was the first to go. We've then seen the Solana ecosystem produce ridiculous gains on meme coins, but equally, I don't think those meme coins are sustainable investments. For every one that goes to ridiculous numbers and produces incredible returns for people, for every one of those you'll see thousands of others that go to zero. And so I'm looking at some of the bigger market cap coins as indicators of altcoin strength. And Ethereum has been, for probably the best part of a decade now, the benchmark as far as altcoins go. The second largest cryptocurrency for many, many years. And what I'm seeing here on Ethereum, and I've pointed this out on X, is that this uptrend that has held price for, again, something like 9 years now, broke down in 2024, and later that year we back tested that level. Now that alone is not enough to suggest that we need to be overly bearish, but when you factor in all the points that I've talked you through already, the yield curve, the weakness that we're seeing in equity markets, indices, and large cap tech stocks like Meta coming into major zones of resistance and being rejected, Bitcoin looks like it's topping out. I think there's a lot of reason to be cautious on altcoins right now. And if you look at the lower time frames on Ethereum, so that's the sort of 10-year view, but if you just look at this chart, the price action over the last couple of years it's really not been that convincing. Everybody has been calling the bottom on ETH BTC for probably the best part of 2 years now, and every time people think alt season's about to start and ETH is about to take off, it just doesn't. It just flatters to deceive. And I think people should be really, really worried if you're holding ETH. It's not my job to tell anyone what they should do, right? But if I were holding ETH, I'd be looking at this chart and I would be concerned. I think there is real reason to worry that there is significant weakness in Bitcoin, and that weakness is exacerbated in altcoins like Ethereum. And I see this uptrend that has held as prices appreciated over the last couple of years has now been broken. we're sitting on what I see as the final major support for Ethereum before we come back towards the 2022 lows. And if that happens, and if I'm right on equities and Bitcoin, I think this is going much lower than anyone can believe. Now, people think I'm mad for suggesting Bitcoin is going back to $4,000. Imagine how mad they think I am when I suggest that I believe there's a decent probability that ETH is going back to $80. And it's interesting because I can't find, people might criticize me for this, but I can't find a compelling fundamental reason why Ethereum should appreciate. That, put aside the fact that I believe we're going to go through a massive economic downturn, Ethereum has underperformed Bitcoin and underperformed Solana for the last couple of years, and I cannot see a catalyst for changing that. You know, what is this project all about? What value does Ethereum bring to the world? Now, Bitcoin has a strong narrative. Solana has probably established itself as the #1 chain, and I think Ethereum has an identity crisis. It's slower, it's more expensive than Solana. It doesn't have the same properties as Bitcoin, you know, fixed supply. Uh, it doesn't have the kind of first mover advantage in the market that Bitcoin does, and it's lagging behind on the technology front to newer coins and newer platforms. And I really think ETH BTC is going to collapse even further over the next couple of years. And I think this is going to, you know, the ETH USD chart is going to look shocking in hindsight. And I'll just wrap up. This will be my last chart because I know I've banged on for a long time now. I'll wrap up with my last chart, which is Solana versus Bitcoin. And again, you know, it's not for me to tell anybody what they should be doing with their money. I can only tell you how I'm looking at this market. And at the moment, what I'm seeing is that we had this correction, which eventually turned into, you know, a really bullish formation for Solana versus Bitcoin. And if you look back in 2023, I was one of the people that was highlighting this breakout and telling people that we were likely to see significant upsides for Solana. I did not hold all the way up, and I regret that. But the last year, we've seen what I think is a massive distribution on Solana versus Bitcoin. So this initial period of outperformance, Solana then went through a sideways pattern versus Bitcoin as Bitcoin strengthened over the last couple of years, the last 18 months. And now what we're seeing, and I've really struggled to see how anybody can be bullish on Solana versus Bitcoin or on the prospect of alt season when we're seeing the #1, you know, the altcoin that has led the charge over the last couple of years, and the altcoin that has established itself as the #1 chain for everyday use out there outside of Bitcoin. That chain is breaking down versus Bitcoin after what, a year and a bit of distribution. You know, to me, even last week, you know, I saw people getting really bullish when Trump announced that Solana would be in the strategic reserve. And I remember at the time pointing out that this just looks like a back test, just a back test of the range low and a big rejection. And what you're seeing is further deterioration this week. I just cannot find a reason to be bullish on the prospect of alt season or continued outperformance of Solana versus Bitcoin. And if I'm right, if Ethereum and Solana are going to underperform Bitcoin and Bitcoin itself is going to correct by 90 to 95%, then God help altcoin investors. I mean, this could be disastrous. If Bitcoin is going to go down 95% and Solana is going to go down, you know, 50, 60, 70% versus Bitcoin, honestly, I don't think there's going to be much left of the altcoin market by the end of this. So I will leave you on that happy note. I know I sound like I'm being incredibly pessimistic. I am extremely bullish for the long-term future of cryptocurrency and extremely bullish for the long-term future of tech stocks. But these things are cyclical, right? And when I see risk in the system, when I see overvaluation, when I see technicals and fundamentals pointing to downside, I have to pay attention. And I can see no bullish catalyst for altcoins at the moment. So do with that what you will. Good luck. Thank you for spending a bit of your day with me. I hope you found some of this content useful. If you have, please smash the subscribe button. Join me for future videos. Please share, retweet this on X. Help me grow and build the platform. If you've got any questions, hit me up on @PartTimeCharts on X. And I look forward to speaking to you again soon. Take care. Bye.